Hello, Michael Shotnik with Sierra Pacific Mortgage. Hope you're having a good start to your week. Reaching out with a quick weekly update for you. And I'm going to start by kind of recapping what we saw last week and then speak to what's in the week ahead. So quickly, let's talk through what Fed members have said kind of to date here, starting in kind of early 2022. And that is inflation is too high. Rates need to go higher. Once rates are as high as they can be, they need to sit there for a while. It's worth causing some economic damage to control inflation, and it's better to risk damaging the economy in order to beat inflation. And ultimately, the Fed does not want to repeat the mistakes of the 80s. And what happened in the 80s was we saw inflation like we're seeing now. The Fed took similar measures. However, they did not stay in kind of a high rate environment, killing inflation completely. They started to cut rates. Inflation reared its dirty head again, and then the Fed, had to circle back and get much more aggressive. You really don't want to see that, and we're seeing this divergence, and I'll explain what I mean here. We're starting to see data that the Fed measures are actually taking effect. Inflation numbers are coming down. Um, Wage growth has come down. Job numbers are still pretty good, but wage growth has come down, and we're sensing some slowdown in the economy. So in a vacuum, that would lead us to a situation where I think we could kind of stay in the position we're in now, and then probably later in the year plan on rates starting to come down. And I do think that's an underlying thought. However, the Fed is not agreeing with that in their words, and there's some speculation here. But ultimately, what they're communicating is a much more aggressive tone than what the data would warrant. And my opinion on that would be they don't want the economy to kind of put itself right back in the position where we were in kind of late 2021. They want to use their words to crush momentum and keep us in this position where we do start to see jobs numbers declining, inflation further declining. So it's really unclear what they'll do. But why I say there's a divergence is it appears that the markets are kind of taking it into their own hands. They're looking through what the Fed is saying, reading the data, and reacting accordingly. So last week was fairly volatile, but we really did end on a high note. Mortgage rates had a very good day on Friday, and that was the result of slower wage growth. And then the stock market did very well as well. And that was not due to the Fed's immediate actions. That was looking at the data. The Fed is communicating that the economy needs to be kind of hit harder, but the markets aren't agreeing with the Fed's approach. So ultimately we're going to see this battle play out over the next months and course of the year, which will be very interesting, a little concerning, of course, but interesting. And this week will be a pretty good catalyst to that. On the 13th, we'll see updated inflation numbers come out, and then the 14th, the Fed's reaction to those numbers. So do they stay idle with the Fed funds rate? Do they raise rates? We'll see what happens there. I'll keep you posted. If you need anything from me, please let me know. Otherwise, have a great week and look forward to talking with you here soon.